डेटा स्पीक्स, डेटा बोलता है 2014 के बाद. Today we are going to talk about the stock market trends. Our index is Nifty 50. शेयर बाजार का रुझान 2014 के पहले और 2014 के बाद. Stock markets reflect the sentiment of investors in the economy. Stock market also indicates the standard of living and how much people spend. Middle class is burgeoning. People seek to invest in places where they get more returns than FDs. See, FDs returns are 5%, 6%, 7%. But if your inflation rate is 5%, 6%, you are not able to get much returns. You are getting the returns only 1.5 or 2% per annum. So people, those who want to invest, they always seek some other opportunities where they get more returns. They invest in mutual funds. Mutual funds in return invest in stock markets. They invest with the stock markets where they get the more returns, but the risk is very high because there is a lot of fluctuation. I have attempted to analyze the data before 2014 and after 2014. See, when stock prices rise, consumers and companies have more wealth and confidence, leading to more spending and higher GDP. When stock prices fall, consumers and companies have less wealth and optimism, leading to less spending and lower GDP. So there is a direct relationship between stock market and your living style and your consumption style. As there is fluctuation in the market, we analyze in two ways. One, calculation of monthly returns, and continuously added those returns month on month, that is cumulative monthly returns. Second, we calculated the compounded annual growth rate CAGR by log linear method. You can watch my another video where I have explained how to calculate CAGR by log linear method. Data for 8 years before and after 2014-15 has been taken from NSE India, Money Control and Yahoo Finance. Monthly data April 2006 to May 2020. The percentage monthly increase has been shown in the coming charts. Now, how the cumulative monthly returns have been calculated? Say, in April 2006, the Nifty was 3,557.6. In May 2006, it was 3,071.05. So returns are 3071.05 minus 3.557.6 divided by 3,557.6 into 100. So there was a negative return of minus 13.6805. The next month, the increase is 1.86%. So this has been added to this. This comes out to be minus 11.82. Similarly, next month, the increase is 0.48. So the cumulative return is minus 11.82 plus 0.48. So minus 11.3. In this way, we continued till May 2022. See, the charts between 2006-7 to 2013-14, and we have taken it up May as a point where we are going to see the observations. So these are the cumulative returns May 2006 to April 2014. The cumulative returns depict here that during November 2008 to April 2009, there was a fall in stock markets. due to the subprime crisis. And then it started increasing it again. And this returns here 2014, May 2014 to April 2022. We have seen the minor crisis here in January 16 to May 16, but then major crisis was in January 22 to May 20 because of this COVID-19. Now, how much? Now, this one is this one is approximately your 90.88, this point, and this point is your approximately 105.99. What does it mean? It means if anybody invested rupees 100 in the stock market in May 2006, it became 190.8 in 2014. Approximately increase of 90.88%. Similarly, if somebody invested in May 2014 and his investment of 100 rupees, that became 205.90 in May 2022. If you invested 100 here, there was an increase of 105.90. So your investment was 205.90. Here your investment came out to be 190.88. So anybody who played in the market in May 2007, 2014, his investment increased 90.88%, but here his investment increased 105.90%. It means there is an increase of 15%. It means the investors earned more than 15% in the years, during the years May 2014 to April 2020. There was one major tension in this period, that was subprime crisis in 2008, and here was a major tension in this period 2020 due to COVID-19. Now we calculated the compounded annual growth rate for the 8 years taking yearly data. The yearly data shows before 2014, the compounded annual growth rate was 6.22. Compounded, just like your interest on interest, returns on returns. So this is 6.22. But after 2014, your investment has increased at 10.07%. So for investors, this was a happy period after 2014, despite the major tension of 2020. But here also there was a major tension of 2008, but the compounded growth rate was only 6.2%. Thanks for watching. Wait for the next video on any new indicator.